Hi everyone. I have a new guest today, Ericka Gorman from Red Stone Credit Union today. Ericka, we are glad to have you. Thank you for joining us. How are you doing?
Great, thank you. I appreciate you having me on.
Absolutely a pleasure, Ericka. So I mean, we've been chatting for some time, and then finally, Ericka got some time to talk to us. Usually, she's really busy lending. I mean, leading the entire lending function at Redstone. Now she finally got some time to talk to us, so we feel like we are elated. So I'll do a quick, short intro. Won't take a lot of time. Uh, she is based out of Huntsville in Alabama. We were just chatting earlier, right? That's what Alabama is, one of the states. Very sadly, I've never been to, right? And I need to find a reason now to come. Possibly, Erika is the reason for me to next schedule my travel to Alabama. Might be. Let's see. So she's again based out of Huntsville. She's a chief lending officer for Redstone. She was earlier with Great Lakes Credit Union. Let's say hi to Elizabeth Osborne. Hi, Elizabeth, your friend. Yes, she was CEO of Great Lakes. Has close to 2 decades of experience. Leading high performance teams. Her specialty lies across, I would say, intersection of process transformation and operations management, right? And by doing these two, she has led multiple teams and now focuses on lending as a whole, right? Uh, Apart from what she does at the credit union, she sits in a bunch of boards. The most interesting board that I find is board of a booster club for her son's basketball team. That's the one which I love the most. But apart from that, she also sits at a few interesting boards. She's in the lending council for America's Credit Union. She's the chair of North Alabama Revolving Loan Fund. So this is another interesting concept we're chatting about, right? This is a CDFI that serves unrepresented or underrepresented women-owned business or veterans who are looking for support, right? So that this loan fund disburses money. And apart from that, she is also in the board of North Alabama Food Bank. That's also a very good cause altogether, I would say. So as a whole, yes. Long story short, she doesn't have time for interviews. She's very busy, right? But I'm glad that she had time for me. So firstly, Erika, thank you for your time.
Oh, thank you. I'm very excited to be here today.
That sounds good. Uh, I'll ask you a question. So let's talk about your journey. Let's talk about your journey and background. So why don't you talk about that?
Sure. I don't think I took a traditional path to arrive where I'm at. I certainly didn't expect to end up in lending when I was 18 years old and trying to figure out what I wanted to be when I grew up. I started out going to college for theater. I thought that I wanted to be an actress. And once I arrived at the school, I decided that there was a lot of people much better than I was. And so I stopped school and I worked full time and took classes part time for many years. I actually did not get my bachelor's until I was 32,
Wow.
maybe 32. And so I have a bachelor's in human resource management and operations management. And then some years later went on to get my MBA in organizational design and management.
Mhm.
So I started off at Great Lakes Credit Union, worked there for 7 years, started in accounting, learning how to balance general ledgers. And I had no experience in this, but they took a chance on me, and I'm very grateful. I would say that that is kind of the theme of my career is someone took a chance and was willing to teach me, and I'm very appreciative of those people over the years. So I learned how to handle accounting operations and moved into the manager role there. Took on some additional responsibilities with compliance and auditing, titles, things that other people really just didn't want to do. So worked on how I could improve those processes because, as you mentioned, process design is something that's just really exciting to me. And so I moved later into project management and it was a brand new role for the organization, and I had a leader come up to me and ask me would I consider leading the IT area, of which I had no experience, but he took a chance on me and said, you know, your people skills are great, your project management is great, we'll teach you the technology side. And it was a wonderful experience. I learned so much from him. And, you know, I'm still in touch to this day because it's really great to have someone who offers those different perspectives than what you may have. From there, I moved to Alliant Credit Union because they were looking for a consumer loan project manager, but also someone who would double as a product manager on the consumer loan side. Again, I had no lending experience, but they took a chance and taught me the lending side while I was there, and I headed up the project side. So, you know, I definitely remember my first week being thrown in and them saying set rates, and I had no idea what I was doing, but I learned and spent the next 10 years at Alliant with some really great people. After that, I got a call from Great Lakes, and they said, would you consider coming back if it was for the right role? And I said, well, what's the role? And so it was Chief Lending Officer, and I did accept that. It was a great opportunity for me to move into executive leadership without moving my family, because I was located in the Chicagoland area, and these two credit unions are pretty close to each other. And it was great. Did that for a little while, and then had opportunity to move into the COO role, which is where I was when I left Great Lakes. And so after leaving Great Lakes, I had the opportunity to move here to very warm Huntsville and Rocket City here in Alabama, and I've been here now for 3 years.
I mean, this sounds like almost my journey. It's like, I mean, what you do right now is summation of the opportunities that you get in life, and I'm so glad that you are calling out that you're grateful to the opportunities that you got at Great Lakes and Alliance. So this is really great to hear from a leader like you that you're grateful to your
Oh, yeah.
past. It's amazing, right? Uh,
Yes.
Absolutely. Uh, so, what is your current role right now? I mean, I know we spoke very quickly, but you want to talk about your current role at Redstone, what you do, what is your charter, what is your plan?
Yeah, so Redstone is a larger size credit union. We're heading towards the 10 billion mark. And so I am responsible for lending, so commercial lending as well as commercial accounts, mortgage, consumer, as well as collections. And so it's really the full life cycle of the loan. And we're working on how can we, you know, look at growth. How can we grow and add value to the membership? We have a very strong base of members here in the Huntsville area. We have more than 90% market share in this area. However, in other areas as we expand, say upwards towards Tennessee, we don't have that same recognition or penetration. And so looking at how we can serve these areas and remain relevant to our current areas. We're talking a lot about Gen Z and how we can differentiate ourselves to make sure that we're staying relevant for them. A lot of things that we're doing are how can we improve our experience for the members. You know, mortgage has been horribly slow for the last
Yes.
year and a half, 2 years. And so we've spent a lot of time really taking our process apart, looking at it from not only an operational side, but how does the member experience all of these standpoints and what questions do they have, really journey mapping it out, and then making the organizational changes needed to support the areas that we identified as lacking.
Absolutely. I think, till the time you're like, you reach the 10 billion mark, it's good, right? After
Yeah.
you cross 10 billion mark, it's a whole new ball game altogether. It's a different battle you have to fight. It's like compliance,
Yeah.
to strategy, to boards. It all changes. I've seen my credit union partners moving from that below 10 to 10. I usually work with credit unions at your size.
Mhm.
Less. Just below 10 or more, bigger than 10. You talk to more than multiple people, but it's a journey that you walk. And I definitely think with your partners that you have right now, you'll be able to achieve that. That's really great, right? Uh, I want to ask you about your leadership style and philosophies, because obviously you not become CEO at Great Lakes or CLO at Redstone in a day. It has taken you like years altogether, 2 decades,
Yeah.
right? So what is your take on leadership philosophies? What are your typical? I ask you one single question: what is leadership to you?
Yeah. Um, I would say that the way I approach leadership is challenging everyone to be their best self and supporting them in any way that I can to help them achieve that. So, if you had to, name the style, I would say there's something between servant leadership and transformational. That I'm some sort of a balance between those two. I really am very, very devoted to growth, personal growth. I have a goal for myself that every 2 years I will have learned something new. And I don't mean, something small. I mean, I'm going to have studied something, gotten some sort of certification, you know, done a deep dive on a subject, whatever it might be, so that I don't get stale. Because I think one of the things where I can add value is being able to look at things through different lens. And that's I try and encourage others to invest in themselves and look for ways that they can challenge themselves to continue to grow as well.
Yeah, it's a very unique perspective that I got. It's not only just servant leadership, because uh, almost all leaders they talk about servant leadership and multiple variations of it. But you are a combination of servant leadership plus empowering your team to grow, right? That's what even I feel. Empathy and helping your team to grow, having a clear set growth path. If you do not have a growth path for your team members, you will never be a successful leader. You'll always be, someone who commands leadership, but someone who's not a leader per se. So this is very in line with even I think this is great, right? Uh, now, you told me earlier that people took chances on you. Similarly for
Mhm.
me, right? People took chances on me. Right now, you being a female leader, I'm definitely sure it has not been easy for you to walk the path, right? It's difficult. Even for bigger credit unions, smaller credit unions, you have a lot of female exec leadership, but in bigger credit unions, there are hardly any, right? I was talking to April from MSVFCU before this. I also have the same question to her, right? The bigger credit unions do not have women in exec leadership, right? She has a different version of it. Now, if I ask you the same question, right? So, uh, if you talk about not obstacles per se, but more of lessons learned across the way, if you want to pass on some of your challenges slash learnings in small nuggets to my audience, because at the end of the day, everyone wants to work for a bigger credit union, right? That's basic, right?
Sure.
So, what is your 2 cents, and what are your 2 cents for aspiring leaders?
I would say that the number one thing is even if it's scary, it's okay to try it. Sometimes I think women, especially, we think we're not ready for a role, or we think that we're not qualified because we don't have 100% of the experience that they're looking for. Maybe we have 85, and um, I think that women tend to not give ourselves the benefit of the doubt as much. And so we need to be willing to take that risk, right? And make that jump. I remember when I was considering moving to Alliant, I had been at Great Lakes for 7 years and I was scared. How do I move to a whole new place, right?
Yeah.
And then, moving back, how do I move into executive management? moving here, do I relocate my family? Do I uproot my entire, I've lived in Chicago my entire life. Do we move to the South and completely upset everything that we know?
Mhm.
And so, you need to think about it in a way that, I still do all the pros and cons, and I'm a huge list maker. And if you could see over here, I have a huge list of sticky notes and things, because I like to be able to see work. I'm a big
Yes.
believer in that. But just really, it's okay to be afraid and do it anyway.
I would say yes. You touched all the right points, all the right chords, I would say.
Yeah.
Uh, Absolutely. And, I know that you're using, you have a focus on digital transformation on AI, right?
Mhm.
So, would you want to cover maybe, a few quick pointers about how are you using data and AI at Redstone to bring about a transformation, right? We would love to hear that.
Sure. Uh, Well, I'd say we're fairly new in the AI journey. We implemented Zest AI about 14 months ago, and so far we've seen a marked improvement in our approval rate. Say we've gone from 56 to 68%. We have no negative impact to first payment defaults, but it's still really too early to see what the full life cycle delinquency impact looks like. But we've been pleased, and so that's only on credit cards. But we're looking, we're right now working on implementing the models for other products. In addition, we're looking at the generative AI through with Clutch to offer members feedback throughout the consumer loan application process. Uh, we've been working very closely with them on their HAL solution, and we're really excited to roll that out. And then we're currently testing with Document AI the ability to audit our HELOC packs for all of the HMDA information, as well as, was it signed properly, completed correctly, it, because that is all done manually today. And it's very time consuming. And so we really want to let staff focus on where we add value rather than things that are can be automated. And
And
so we're looking at it from not from a staff reduction standpoint, but from a value add standpoint. Where can we reallocate staff so that we can give more value back to the membership?
yeah, I think this is future. This is tomorrow, right? Unless you do it. I was having the same discussion. I think today a couple of times that JP Morgan Chase. Chase has allocated 17 billion USD for innovation. Now, credit unions all together combined won't have that number because we don't have that budget. But
Right.
still, does that mean that we don't do anything? Not really, right? If you want to be in the game, not competing, but serving our members better, making better decisions, be it lending, be it deposits, be it experience, we need to embrace the change, right? I always call it a journey from BI to AI, right? Business
Yeah.
intelligence, analytics, advanced analytics, AI, then generative AI. It's a whole life cycle that you have to run, right? And I'm sure that Redstone has an analytics program in place, and you're
Which
picking up use cases which are most relevant, the ones that are
yeah.
giving you the maximum impact.
We
So
have a data science area, and they're currently migrating all of our data into Snowflake. And so we have a solution today, but looking forward to getting everything in there. We believe it will be more robust. But the data scientists that work here are fantastic, and they've really helped us. I'll say, for example, I mentioned Zest. They really helped us validate the model so that we knew that it does perform the way that we anticipate, rather than just taking a vendor's word for it. It's nice to trust but verify.
absolutely, I mean, if you ask me about the big bank policies, you just cannot implement a model blindly. You need to have a team called MRM, a model risk management team. That's basic. After a model is implemented, every quarter or 2 quarters or 6 months or a year. Model has to go through revalidation, is what we call revalidation.
Yes.
Look at if it's still relevant, if it's still performing the way it was performing earlier. Is the lift still significant or not? If not, goes, build a model from scratch or retrain the model using new variables, right? So that is something which you're doing. I mean, I'm glad you're just not using I wouldn't call it toy model, but an industry model, because Zest again does not develop a model for yourself. What I understand, Zest already has a pre-developed model and has brought to you for scoring member applications. So you should always verify. And I'm glad that you're finding this process very robust, and that's like the cornerstone of whatever you do in lending. So that's great, because at the end of the day, it's about minimizing negative selects, right? If you have
Yeah.
negative selects, you improve your application, improve approvals, but negative selects is what hurts you. And obviously, to your point, looking into the portfolio for the next 1 year, 2 year, 3 year, look at the delinquency rates, the DPDs, to see if it's actually working, right? But I'm really glad to know that you're experimenting, trying on AI, and trusting AI for day-to-day decisioning that was earlier very manual, very rule-based. So this is great, Ericka. This is like a welcome change for credit unions, right?
It is.
Absolutely. Now, since again you've worked across multiple credit unions, you have your own point of view about where the industry is moving. You sit on the lending council for America's credit union right now. So, I mean, I'm personally very confident. I mean, I came from a industry that was not credit unions 2 years back. I came from Accenture, joined EXL. I was always consulting for the Fortune 500s, right? But when I realized what credit unions add value, I was mesmerized. I was like, yes, this is where I want to be. This is where I want to solve for, right? Now, I know that the ecosystem has its own challenges, right? Be it rates to attracting Gen Zs to millennials to improving member experience. That experience is a really important thing. I know that there are challenges, but let's not trip about challenges. We need to work together to make things better, right? So, what is your point of view, Erika, on where the industry is moving, right? And where do you think is the ecosystem moving in the next 2 to 3 years? And I mean, in short, where are we heading to?
Yeah, I think we'll continue to see industry downsizing. I think, the pressure that's on some of these very small credit unions is not very sustainable. With the compliance regulatory requirements, just all of the work that goes into running a small credit union, I think they'll continue as you see more retirements come up. You'll see more consolidations there. I think that there will continue to be investment towards efficiency and technology. We have to make sure that we're providing an experience that, if not, is as good as one of those top 10 large banks. It rivals it, right? It's something that keeps us in the game. And then, we need to be able to really take the data that we're getting, and I think we're going to continue to see fraud grow. I think that they're becoming more and more sophisticated with their plans. No longer is it just someone that you could pick out of a crowd very easily for how they were coming up to your teller area. And so I think that how we approach fraud, it will be critical for credit unions over the next couple years. I also think collections is going to continue to be very important to us because of the economic cycle.
I mean, 2 points to cover, right? I think in fraud, I always tell everyone when I consult, right? An average fraudster is way, way smarter than
So
an
smart.
average credit union person who's looking at the fraud patterns, right? So you definitely need data and AI to predict even before the fraud happens. So
Hmm.
it's not about just using scores. And I'm not naming vendors now, but still, it's not about using scores, but it's about that holistic strategy to go and and fight fraud. That's one. And second, for collections, definitely, right? I mean, not only for Redstone, but for the entire ecosystem. Uh, the loan balances for credit cards were at highest, right? Followed by delinquency rates were increasing. But I mean, it feels so. disheartening to me when I talk to a few credit unions that there is no way or mechanism to predict delinquencies, right? That should be the basic thing that needs to happen, right? Unless you do that, you're still, you know, I would say chasing the cat before after the cat has already left, right? It's about so yeah, and that's the analogy I use. So you always try to bail the cat first and then, right? Otherwise, it's different. So yes, collections is a very important focus. I even personally think I'm actually authoring a paper right now talking about just collections and fraud for credit unions. Interestingly, and I'll reach out to you for your 2 cents because this is very much in line to what even I think. But Ericka, in the interest of time, I know I would respect your time. So this was a great unfiltered chat between us. I really appreciate this time. So thank you.
Thank you. I really appreciate you. Take care.
Absolutely.